Okay, welcome everybody to another session of Endowus Live webinars. So today is an exciting, fun topic, and the topic du jour is cryptocurrencies, an investor's crypto-nite or a diversification must-have. Really excited to have with me KK, who is a very well-known blogger running a blog called Risk and Returns. KK, welcome to the Endowus Live webinar.
Hi, good evening, everyone. Hi, Sam. I'm KK, a small blogger, not really a famous blogger, as they say, but yeah, I just run a very small independent blog. Yeah.
Great, fantastic. And as most of you may know, I'm the Chairman and Chief Investment Officer of Endowus. And just a quick, as a licensed MAS regulated entity, we have to show our disclaimers to get going. Sheng-Shi, if we can, yes, this is the fun disclaimers. And then we'll move on to the next slide, which is the Slido slide. So basically, we'll have an open session. It'll be a fun discussion with KK, who will share his journey as a blogger, as an investor, but also as a crypto investor. So he's a well-known, I guess, crypto millionaire or multimillionaire investing in crypto. So not maybe what you really think, but somebody who's really interesting. I also want to hear the full story from KK, although I know bits and pieces. And I think it'll be really good for our audience to hear from the horse's mouth about his own journey. So Slido is open. Please plug in this number 064934. On the YouTube channel, it's below. So there's a lot of useful links underneath on the YouTube channel. Please subscribe to the Endowus YouTube channel, and also use the Slido poll on there so that you can ask questions later on. We'll be happy to answer it. I will check on it during the whole webinar to see if there's any useful questions that we should address along the way. And I see already we have like 4 questions. So please, participate, contribute. Please vote up the questions that you think are really good. And we'll deal with them at a later time. Also, a quick plug, next slide, about next week. So Endowus, as you know, is a digital wealth platform. We're an open platform that addresses all of your wealth needs. We are actually famous for being the first and only digital advisor for CPF investing. So we brought the whole offline CPF investing experience online, made it seamless. We brought in passive index funds into CPF for the first time, created broad, diversified, low-cost portfolios. And in the process, we've created other great solutions like CashSmart, which is a high-yielding product like a money market fund for your short-term liquidity and your emergency funds. But also we have this FundSmart platform, which people may not know very well, but Endowus espouses an institutional framework of investing. We access institutional share classes, clean share classes. Even for retail funds, we give 100% trailer fee rebate. And so our platform is actually one of the cheapest, and for most funds, the only platform where you can access certain institutional share classes, dimensional funds, passive Vanguard index funds for CPF, and exclusive ESG sustainable funds. We have a core portfolio, but you can build your own satellite positions and portfolios on the FundSmart platform. This month alone, we've onboarded 11 new funds from various global fund managers. So we're really excited. And we have 2 people, Wei Mei, who is our Chief Advisory Officer, previously at Deutsche Private Bank, UBS, and Credit Suisse, where she was doing investment advisory solutions. And Yu Lin, who's our investment lead and lead for our fund due diligence. So they will be presenting on curating best-in-class funds for your portfolio and why the FundSmart platform is so unique and is an excellent platform. So that's next week. The week after that, we have Ru Ming from the Woke Salaryman joining Greg, my partner in crime and CEO of Endowus. So look out for that webinar. I think it's on pets and investing. So if you're a pet lover, definitely join us for that one. Next page. So just interestingly enough, this was a survey by Merrill Lynch, Bank of America on long Bitcoin, which being the most crowded trade. The second one was tech, and tech was overtaken by Bitcoin. Obviously, we know what happened. What's also interesting is the long ESG one, but that's a separate topic for another day. Next page. So the question that many people ask, people associate crypto with Bitcoin, and that's it. But obviously, this is a much, much broader market. And if we can have the next slide. It's a much broader market, and cryptocurrencies in general and tokens and virtual assets is a much, much bigger and broader market. And many people are now asking, is it a legitimate financial asset? And in many ways, I think it has a very many characteristics of being a financial asset. So what people say is that it's not a real asset, it's not a physical asset, and also it's not a productive asset. What it is definitely a virtual asset. It's debatable whether it's non-productive asset or not. I think KK will go into that. But this is what people say. But they say it like it's a very negative thing. It's a non-productive asset, it's a virtual asset, so it's not real, it's not physical. But think about it. What other non-productive assets are there? There's wonderful things like wine, art, gold, trading cards. I just saw an article that Tom Brady first edition trading cards is selling for $1.3 million. A square piece of paper trading for $1.3 million doesn't mean anything to 99.9% of the global population. Does it resonate with everybody? And crypto is supposed to be less, useful than a trading card. So these are things that I think we need to grapple with. These are real questions and philosophical questions. And what does it mean to be a financial asset entering mainstream? It will have certain characteristics of financial assets, like tradability, liquidity, store of value, and there will be more financial instruments like derivatives, ETFs, funds and institutional treasury management options. And these are actually all happening in the crypto space. So, which begs the question, maybe it is a financial asset and it's something that we need to take seriously. There is this big, broad anti-establishment sentiment when it comes to cryptos and Bitcoins and other cryptos. And many people see it as a hedge to the traditional financial infrastructure. The argument that fiat currencies are going to go to nothing and therefore crypto is the future. So we don't espouse these extreme views, but there is some argument and to be had into that argument. But also, we also need to be critical about what cryptos are and where the inflationary risks are, with inflation meaning there's printing of money, there's printing of cryptos and tokens as well going on. So I think we need to weigh these factors and really differentiate between the different crypto currencies and tokens that are available. Next page. And so, next page. Yeah. So this is a Binance site, right? Which is an amazing platform. I mean, if you think about what the company's developed over the past several years, it's pretty amazing. And most people think that cryptocurrency is just for trading, buying and selling, and that's it. But you can see how the market has evolved on cryptocurrencies. You can see that, there's P2P trading, there's traditional trading, but you can buy on margin, you can do P2P, you actually have stock tokens. So you can actually use the crypto to buy stocks like at Netflix and Amazon and real stocks, right? That are tagged to the token's performance. You actually have derivatives now. So you have the futures that are listed on the US. You have vanilla options, leverage tokens. So you can actually go long and short as a retail investor. You can do that. And then you can do a lot of financial transactions like earn money, like staking it, like getting a yield on it, use it for loans and swaps as well. So it's very broad in the way the crypto is using and developing as a financial asset. Next page. So the next question is, if it's not a financial asset, or if it is a financial asset, is it a currency? So that's the other thing. People think that cryptocurrency and therefore is a currency. Actually, I think, versus it being a financial asset, crypto being a currency in the real world has an even weaker argument, right? Because you're not really going to buy a pizza or other things in the real world and use it as a main source of exchange. So trade transactions and purchasing of goods and payments in the real world, day to day, is probably going to not happen because of the intrinsic nature of the technology, which means that it takes time. Everybody has to, approve it, and it's not readily available and accepted. And to be honest, fiat currency and credit cards and other payment methodologies actually work really well. So I think that, there's a less of an argument as a mode of exchange, but already in the virtual world, whether it's online commerce, NFTs, like purchasing NFTs, or virtual art or virtual items, or exchanging cryptocurrencies, like for trading. So currencies are used in the real world not only to transact and purchase goods, but it's used as a payment and transfer across border. Crypto can do that. Exchange other currencies. For example, if you're going to switch your Belgium, Belgium, I don't know what it is actually, Egyptian pound to a Thai baht, normally there's no cross exchange because there's capital controls. So you actually change the Egyptian pound to a US dollar, and then you change it to a Thai baht. And that's a mode of exchange. And I think that's already happening with crypto. Trading for financial instruments for speculation, obviously that's happening. And KK will go into a bit more detail about, for stable coins or yielding coins or as a store of value, there's certain cryptos and tokens which actually can do this. So it's a very broad suite of products. And, the next page is just for fun. One of the reasons why it cannot be a currency and is more a financial asset because the value has done so well. Chamat bought his house for $1.6 million with Bitcoin in 2014. That Bitcoin was worth $120 million earlier this year. And obviously the famous Bitcoin pizza guy who bought 2 pizzas and that Bitcoin that he paid for the 2 pizzas back then in 2010, which is a long time ago, is worth 365 million earlier this year. So, these things happen, right? And as a financial asset, it's given tremendous wealth to people, but a lot of wealth has also been lost. Next page. So the other argument that people use as they discuss about, a financial asset, crypto being a financial asset, is how effective it is in being a non-correlated asset. So if you look at it from an asset allocation perspective, should crypto be an asset allocation? Because of its volatility, it's very difficult to argue for it. But the one thing that it has going for it is the fact that it's actually a really non-correlated asset. So there's high correlation between the cryptos, but if you compare to the other asset classes like gold or S&P 500 or fixed income in the form of global ag and oil commodities, yes, there are certain periods where there's high correlation and there's correlation between them. For example, equities and Bitcoin correlation has gone up quite a lot. At Ethereum S&P 500 correlation year to date is 73%. So it's actually really high. But you look at the correlation with gold, completely negative. Its correlation with, other asset classes like fixed income is negative, for example. So, it's actually changing as we see as time progresses. Next page, please. Next page. And, the argument now is because the Fed is printing so much money and the liquidity is going into crypto, and crypto is now a much more broadly used financial asset where a lot of money is going in. Actually, it's increasing the correlation with traditional asset classes. So this is a case against crypto as an asset class and financial instrument, is that actually the whole reason you want it, regardless of the volatility, is that actually it's non-correlated with other assets. But if this correlation rises, as we saw with Ethereum and S&P 500, and here NASDAQ correlation with Bitcoin, if the correlation rises, then one of the main reasons why you want to own this asset class has diminished, right? So I think that's one thing that we need to keep in mind and watch this correlation metrics. Next page. The other thing I think is also important is that, crypto is not one uniform space, and KK will go into this in much more detail. It's every crypto, unfortunately, in the recent collapse and in previous cycles, it's very difficult to differentiate between them because there are a lot of utility coins, other usage cases and useful productive assets that exist, but they've all moved together up and down, and that's a real bummer. And I think that maybe going forward, what would be really helpful for the space is if we can really differentiate between the wheat and the chaff. And if we don't move all together, that will also validate the fact that it's not a correlated asset in and of itself, but also with other traditional assets. So from an asset allocation perspective, it's not a mature financial asset. Maybe we can call it a financial asset. Certain cryptos are productive, many are not. Maybe it's not established itself as a cryptocurrency, as a mode of exchange, but in the virtual world is very, very prevalently used. So even as a currency, I think it has certain value. So with that, I'm going to pass over to KK to maybe the next page to maybe share his journey, from being an investor and also moving on to crypto. And a quick plug for Endow Us, because you are a customer of Endow Us, right, KK?
Yes, for the CPF product.
That's right. So I can't let you get away without saying that. So, so yeah, I'll just hand over to you, KK, for just sharing, because I think your journey is fascinating, and I'll come in with questions, and maybe we can debate certain aspects of the various things we discussed.
Sure. Thank you, Sam, for the opening act. So just to let viewers understand a bit of my background and my investment journey thus far, right? As a typical Singaporean. So I started investing in traditional stocks, right, back in 2013 when I graduated, right? And I always remember the first few stocks that I bought is like the FANG stocks, right? The Facebook and the Google. So the rationale was that, I'm a young guy then, I can afford to take some risks, right? Especially on good tech stocks that I use almost every day. So fast forward to 2017, right? I was like reading a lot of personal finance blogs at the time. And so I was like, yeah, I can do that too, right? So I decided to start my own blog, right, with a focus on more about fundamental analysis of stocks and REITs, right, which were popular then. I used it mainly as a way to like manage, share how I manage my money, right, and to show people that you may not need to have expensive advisors to come along and manage our money for you, right? And at the same time, it's also as a way for me to hold myself accountable for my own investment decisions, right? By having a log, a journal, right? That over time will chronicle all my investment moves, and from time to time I'll look back at it and review those decisions, right? Right.
Yeah, actually,
so
it's amazing that you publish a monthly portfolio review. That's fascinating. You're so transparent, but I hear what you're saying about accountability. It's really useful. Yeah.
Yeah. I don't know how many people actually believe the figures there, but we'll see. Yeah, but okay. So fast forward to 2020, right? So I guess that's why we are all here today for this session. I made a very significant decision to transition slightly more than half of my traditional portfolio into crypto, right? And I'll cover some of the reasons and thought process behind that later. And well, my journey is still ongoing, right? Who knows when I'll reach FIRE, right? Financial independence and retire early.
Aren't you there already?
Well, I mean, if you take a more traditional view of crypto, maybe not, because that may be vapor value, right? So until I'm on a more sure footing, then maybe I'll consider retiring. Yeah.
KK, do you mind sharing how old you are to the audience? Is that something you can do?
Yeah. I mean, I'm sorry.
So people can place you in their own journey, right?
Okay. I'm going 32, going 33 this year. Yeah.
Great. Yeah. So you're relatively still young, and you've been investing now since like 2013. Yeah, but you still believe that you have more ways to go. And one of the reasons why I asked that question is that you're not ready because you're still actually quite young and you have a long way to go. Yeah.
Yeah.
Great.
That's part of it. Yeah. And I mean, if I had my portfolio value in something that is more stable, maybe I'll consider actually retiring, but not at this time. Yeah.
Got it. Next slide.
Yeah. So just a quick background as to my experience with crypto down the rabbit hole, they say. So as with most traditional finance investors, right, they first heard about crypto in 2017 most of the time, right? There's this huge bubble that happened in Bitcoin and Ethereum back then. And as you can see here, Bitcoin hit 20,000 in like early January 2018 before collapsing down for a 2-year bear market, right? So why I highlight this is because back then I was looking at this price movement and it was like very exciting and all that, right? And I did my due diligence then in terms of understanding what you could do with Bitcoin, Ethereum, and the technology behind it, and all the various buzzwords, right? What blockchain, consensus, algorithms, and all that, right? So I looked through all this stuff back then, and it was fascinating, but I just felt that what you could do with it was still very limited, right? I've always invested in more productive assets, type of thing, right? In terms of like REITs and stocks and all that. So crypto back then, it was like buying Bitcoin was like buying US dollars, maybe investing in US dollars in a way, because it's like a currency, right?
Yeah.
I didn't make the decision then to buy, but it piqued my interest, right? To maybe look at it again some point down the road when it has matured some. Yeah. So moving on. Yeah. So fast forward to December 2019, right? I actually came across this blog post talking about BlockFi, right? Which, if you guys know, is custodial service to whereby you can lend or deposit your coins into a BlockFi account and essentially earn an interest on your crypto, right? And at that point, this was a very foreign concept to me, right? Crypto, you can actually earn interest on crypto, right? So, and the interest was quite attractive, as you can see at the bottom, right? I'm not sure if the viewers are familiar with stable coins, but as you can see at the bottom is they're offering 8.6% on USDC and GUSD. Just a quick point about stable coins is just that most stable coins are pegged to the US dollar, right? So one USDC is equivalent to one US dollar most of the time, or close to it, right? So in a way, this was like telling people that, oh, you can earn 8.6% on US dollars. That's like ridiculous, right? In this current climate, whereby you have low interest rates, thanks to Jerome Powell and Janet Yellen before that, right? And so it was very attractive at the time, and I was, as you can see, like the frog at the side, like very shocked, right, and amazed, right? So yeah, so what I did was to initially take some cash out and then deposit into this account, right, to understand like how it works and whether it really pays out that percentage, right? Yeah, and so that was.
How was the experience?
Yeah, I mean,
Yeah.
it was pretty intuitive, right? I mean, you had to do overseas telegraphic transfer, but and then wait for maybe one day to see it appear in the account, but it was still quite smooth, right? And I tested withdrawals and all that, and it worked, right? So yeah, I was rather cautious about it, and then I because I only put in maybe 4,000-5,000 right at the start to see how it works, and then see whether I get scammed out of my money, right? So yeah.
And you only use the stable coins, not the Bitcoins or other cryptos.
Yeah, because at that point I hadn't done the deep due diligence to understand what you could use those coins for. So I wasn't sure whether I should dive into the deep end of the pool first. So I started with stable coins. No price volatility, right? It was just essentially hoping
Right.
or rather that trusting that the coin will hold its peg, right?
Yeah.
Such that you get the 8.6% yield. Yeah.
Maybe can you
Guaranteed.
explain what a stable coin is to those who are maybe less familiar, just so that they understand? And there's a few of them. There's many of them, right? So just maybe
Yeah.
quickly. Yeah.
Yeah. I guess what most people are familiar with is volatile coins, right? I mean, Bitcoin and Ethereum has so much price volatility, right? So what stable coins aim to do, right, is try to stabilize their price against a specific asset. And most stable coins peg themselves against the US dollar. So how that peg is achieved, it's a very technical question. But
Yeah, but
but generally, some of the more common stable coins usually involve a company custodying US dollars and then issuing a one-to-one token, right? So if they receive one US dollar, they'll issue one USDC, for example. So and the opposite redemption is also possible, right? And that's how you maintain the stability of stablecoin most of the time. There are others that are backed by different assets, but I don't think I'll go into that. Yeah.
okay. I think maybe move on to the next slide, right?
Yeah.
Yeah, go into a bit more of your journey.
Yeah. So fast forwarding to June 2020, right? So we have gone through the COVID-19 stock market crash, right, in March, and I had invested heavily in REITs back then because a lot of them drew down like 50%, right, easily. So it looked extremely cheap. So and when we go to June, the market has recovered, and I was looking to rebalance. I made a lot of money from that recovery, right? And was thinking of something else to invest in because at the point the Singapore stock market was a bit how to say sideways movement, right? So trying to think of other things to invest in, right? So it brought me back to the whole BlockFi thing, right? And then I was like curious, like how this yield was generated practically, and whether this is there's something here or not, right? So as a result of my research, I came across the term decentralized finance and DeFi, right, and all the various apps that came out that were built mainly on Ethereum. And I found that it was very interesting, right? It was like I framed it on hindsight. I framed it like a typical investment in like maybe a tech VC type of investment, right? Because all these DeFi apps tend to have founders, they have a community, they have people that are working on these projects, right? And then they do have maybe 2 or 3 year track record. Some of the more blue chip type of DeFi apps, right? They were building throughout the bear market, right, for crypto. And so that was where I focused my attention on. And some of them had very interesting use cases, and then I went through a lot of design documentation, right? And the interesting thing about crypto DeFi apps is that they have very unique tokenomics, right? Which is basically token economics together in one term. So by analyzing that kind of economics and protocol design, right, you are able to like maybe form some models to value some of these tokens. And I was really mind blown by what I found, right, in these apps, right. You had a lot of the functions that I was very familiar with in traditional finance being operated on the Ethereum blockchain in a non-custodial way, right? What that means is like, in traditional finance, in order to earn an interest on your deposits, you need to deposit it in a bank. If you want to own stocks, you need to have an account with a broker. You want to trade it, you need to have a relationship with the exchange and all that, right? All these are financial intermediaries that actually hold your assets, right? So what is happening on Ethereum was that all these assets was actually held on my own wallet. I didn't have to deposit it into any like Binance or some other central exchange, right? I could do it natively straight out of my wallet, and I find that very powerful, right?
And much safer too, right?
Yeah, it's safer too, because I mean, it's safer in the sense that you don't take on custodial risk, but you may take on smart contract risk, right? But that's a separate risk altogether. Yeah. But at least you had control of your assets, right? If you deposit it in a custodial situation, there have been situations in the past whereby exchanges have told you that, oh, you own X amount of coin, but on the back end they don't actually own it. So by operating it out of your own wallet, it's great. You maintain control of your assets.
Yeah.
And so, and the other thing is,
go ahead. No, go ahead.
Yeah, and the other thing that I saw was that because of the bear market, a lot of these tokens were trading at very cheap valuations, right? Because of the way the app is designed and the tokens are designed, they actually do have some cash flows, right? To that is accruing to these tokens, and as a result, you can do a traditional valuation on these tokens. And they were trading very cheaply, even for like tech stocks or venture capital, right? And what was very interesting was maybe due to my timing. At the time, they were aggressively promoting adoption, right, by offering spectacular yield. I'm talking about maybe triple-digit yields, right, which were very common in that space at the time. So yeah, all these factors contributed me into actually allocating to this space. Yeah.
So KK, one of the there's a lot of questions actually right now, but I think we should touch on a few things that you touched upon here, and I think is really fascinating because you focus exclusively on DeFi tokens, right? And maybe people are wondering, how is that different from other currencies? Is Bitcoin a DeFi? Is Dogecoin? What's the difference? Is what percent of the crypto number of cryptos are DeFis? And can you give some examples so that people can at least understand? Not that the ones that you invest in, but which ones do you think as an example that people can understand or look into?
Okay. I mean, maybe talking more generally in terms of like Bitcoin and Ethereum, right? Their positioning in the ecosystem is that they are mainly the first layer, right? They are like the currency layer in a way, or the store of value layer of crypto, right? And then for smart contract platforms like Ethereum, you are able to build on top of it specific apps that provide certain functionality. Like maybe if the project is about lending protocol, right, whereby they can deposit coins in it and then earn an interest. So some examples of this is like Compound Finance and Aave, right? People can straight from their wallet deposit coins into the app and have their interest algorithmically determined and paid to them by the second. So no more monthly interest deposits, right? It's by the second. You can deposit and withdraw anytime, right? So that's one example. If you have like more bigger DeFi apps like trading apps, right, you can natively trade tokens on the blockchain. So one very popular one on Ethereum is Uniswap, right? You can swap any ERC20 for any other coin, right, that is on Ethereum using Uniswap. And the list goes on, right? There's so many types of applications, right? Now you have options protocols, you have derivatives protocols, and they're all designed in a way that is very fascinating, right? It's like they are designed in ways that there's a lot of experimentation going on. Let's just say that. And
so Ethereum as a platform, amazing platform. But Ethereum as a platform is really dominating that space, do you think, or is there alternatives?
I would say it is dominating in the sense that in terms of active products, as in products you can actually feel and touch now. There are other blockchains out there that are trying to, because Ethereum is not the most efficient platform, and there are a few other projects out there that are trying to make the base layer more efficient, and as a result, you can have higher throughput and transactions per second, right? For the apps built on top. So I mean, you want to name some at this time, Solana is very popular.
Solana,
yeah, and some others Polkadot is trying to do it, but they are not there yet. And some other projects, I don't know, like Cardano has said that they want to implement smart contracts. So maybe that's something that will happen down the line. Yeah. So there's a lot of other projects that are trying to do it at the moment, but they are not as mature or don't have the infrastructure live at this time to actually do it.
Yeah. So I think we have a broad audience of people who may be crypto experts, but a lot of lay people. So we don't want to go into too much detail, but I think that was just enough, KK. So thank you very much. But the other question that I see a lot on is on your cheap valuation argument and whether cryptos have any intrinsic value. How do you know if you're paying a premium or a discount? There's another question asking, what is the fair intrinsic value of a coin? Is BTC overpriced versus ETH, Ether? The gap between two coins is huge. So I think some of these are basic misconceptions. Price and value is completely different things, right? 20,000 to 60,000, 2,000. It's not really representative. But the total value of the market cap of the coin, in terms of intrinsic value, I think, maybe if you can explain this as easily as you can, how you value these coins, and do all coins have value is the other question.
I mean, the short answer to that question is not all coins have value, or at least there is because the price generally.
There's only value if somebody places value in it, but there's no intrinsic value to certain coins. Like Dogecoin does not have an intrinsic value, although they may develop technology where it becomes useful, right? But at the moment, it has no intrinsic value, but people are placing value on it. So that's a completely different thing. But when it comes to valuing and valuations, I think maybe you can elaborate on that aspect of it.
Yeah. I mean, L1 layer 1 coins like Bitcoin, Ethereum, the price is actually just a value of the network effects of that network, I feel. How to value that is very difficult. I mean, if you have heard of Metcalfe's law, basically a way of trying to value a network, right? But valuing network is difficult.
On that, right? You wrote on that, did you? Can you point to the blog, or people can search it up on Google, I guess?
Not really. I didn't really write much about DeFi because I'm very scared to point people in the wrong direction, especially in crypto, right? So for Bitcoin, Ethereum, it's a bit hard to value, right? For Bitcoin, maybe you can argue that it may take over gold, right? A certain percentage of gold's market cap, and you can value it that way, right? So that is a more deterministic way of valuing. But for Ethereum, it's really I would say it's the value of the network, right? And so in that sense, right, the valuations I'm talking about here is that, for DeFi coins, right, some of them have token designs that actually direct fees earned to the coin. And by valuing that cash flow in inverted commas, coin flow in a way, you can derive valuations based on like a discounted cash flow or maybe dividend yield, right? Because some of these coins, by staking it, you are entitled to fees generated by that particular platform. And as people use that platform, they generate fees, and then that fees is directed to the coin. And as a result, from that, you can do some kind of valuation using a very simple metric.
Yeah.
Something like price to sales or price to revenue kind of valuation. Yeah.
Okay, great. So let's move on with your slides. I think that'd be great. Next one.
Okay.
Yeah. I'll come back with some more questions. There's tons of questions, by the way, KK. So I'll come back.
Okay, sure. So,
Next slide.
Yeah, so at this point I decided to allocate a significant portion of my portfolio to crypto, right? As you can see here in June 2020, I had like 77% of my portfolio in Singapore REITs, right? As a result of the COVID investment thesis that I did and executed. And what I did was to rotate out a lot of the high risk stocks and the higher risk REITs, right, that I had into crypto. And for that rationale, next slide. So I knew that this was an exciting new opportunity, right, based on the homework that I did. And I wanted to have significant exposure, right? Imagine if I had allocated maybe 1 to 5% of my portfolio as what a lot of people are advocating at this time, right? I wouldn't be where I am today. Right. So the other thing that I thought of at the time was that even if my crypto portfolio blows up, right, in terms of like it goes to zero, right, at least I will have a decent sum still in traditional stocks to rebuild from. And which is why I didn't go all in, right, but I did like a 55-45 kind of split, right. And as for why I specifically rotated out of high valuation and riskier stocks and REITs was to take this like kind of like a barbell approach, right? Whereby one side of the barbell was risky crypto and then paired off with safety blue chip REITs, right? Safer blue chip REITs that will still pay me dividends going forward with some reasonable certainty. Yeah. So that was the rationale for my portfolio allocation at the time. Yeah.
Great. Next.
So and that was how the cookie crumbles, right? Now I'm looking at massive gains, right? So in terms of the topic we are discussing today, right, whether we should allocate to crypto, I feel that I may be a biased person, but because I'm vested, right? But I feel that crypto is here to stay. The innovation happening in the space is massive, and it's really potentially a fairer and censorship resistant and permissionless financial system that is native to the internet. And not to go into too much detail about what Web3 is, but is essentially a foundational component of Web3, right? Which is talking about the decentralized internet. To understand what that means, right, is that the current internet is Web 2, whereby we have a lot of tech giants dominating the space, right? You have your Facebook, your Googles, your Amazon, all these massive internet platforms that control a lot of your data and a lot of the information flow within the internet, right? So Web3 is trying to actually redesign this from the ground up, right, to be more fair, and users who participate are able to control their personal data more, their own assets, their own data mainly. Yeah. And so that's the high level overview of what Web3 is, right? And in order to have that kind of decentralized internet, you need to have a native financial layer on the internet, and which is why I say it's a foundational component of Web3. And if you want to talk about more closer to home things, right, in terms of whether it's more efficient than what we have at the moment, I would argue that yes, that's the case. There's usually reduced intermediaries involved, right, and costs, especially in cross-border transactions, right? Imagine at this time when you want to send money overseas, you have to go through bank A and then send to another bank B through the SWIFT network or something, and that whole process may take days, right? And and as a result, there's also quicker settlement, right? Not just for like cross-border transfers, right? If you talk about even for stock trading, for example, right? In Singapore, you have a T+2, right? You buy your stock today, you have to wait 2 days before it's really settled, right? On crypto, it's like settled within a few seconds, or maybe as long as the longest is like 1 hour, maybe. Yeah. So I feel that it's a more efficient financial infrastructure. And DeFi is also just the beginning, right? We are only looking at financial layer at the moment because that's the easiest to tool. And there's a lot of like very interesting applications that you can build on top of it, right? I mean, there's some mention of NFTs, but I think that that's just scraping the surface, right? Imagine business use cases for NFTs whereby, like, for example, in a hypothetical example, right? Maybe a pharmaceutical company came up with a drug recipe that they want to protect with IP, right? And if you actually tokenize it as an NFT, you potentially can check that, verify that this is not a copyable, this is a unique IP. You can actually charge people for use of that recipe, for example. Yeah, so this is a very wide design space that potentially will come in the future. And another thing is that, non-traditional digital assets can be tokenized, right? Things that we have never imagined as an asset before, like, digital identity or personal data, right? So that's part of the Web3 part. And then some of the interesting applications I've seen before, like in development, but not say very mature, is like you can tokenize influence, right? What that means is like, for example, let's say if you are you want to start streaming, right? Online streaming now is very popular, right? And you want to, there's no way for people to participate in your growth, right? Yes, they can just subscribe to you, pay you a one-time donation as a streamer, but there's no way for people to speculate on that, right? So with tokenization, you can actually, like, for example, tokenize a personal token, right? That represents maybe 1 hour of my time, or that token when you can exchange it for unique media assets, right? In order to watch my shows, go to my concerts, you need to turn in that token, and the price, and as a result of that, you are able to speculate on the growth of that person, right? Because at the start, maybe he'll have very little exposure, right? His token is maybe worth 1 cent, right? And when he blows up, becomes like, I don't know, Andy Lau or something, that token will be worth $2,000 maybe to actually access his concert. So there's very interesting applications that you can do with tokenization, and
there's music IP as well. There's and then I mentioned the trading card argument, right? Because that's effectively, if you get early on a rookie card and then that guy becomes famous, then obviously the value goes up. And it's in the real world actually. It's very like an autograph of a famous actor who became like really more famous. So it's like a digital asset, which is non-traditional, and obviously it's use cases. But a lot of people are asking KK, well, first of all, they want to know which cryptos to buy, which ones you own, how do I get started? These kind of basic questions. And I think people misunderstand a little bit about how you made your money. You didn't make money from trading cryptos, like buying in and out on all these multiple cryptos and like gaining. You actually invested and like wanted to generate the yield, right? Initially with the stable coins. But you broadened it to DeFi coins, whose value were undervalued. And so you bought into those undervalued assets, you thought, at the time, which became a higher value as the whole DeFi sector re-rated completely, right? Especially coming into this year. And obviously we've had a big crash, but you went in early enough. And so some people are asking, is that pure dumb luck? So maybe you can address some of these questions that people are asking.
Well, I mean, I guess in terms of timing, it's probably luck, right? And I would argue that investing involves a certain degree of luck as well.
And life in general. Your
Yeah,
job.
you may have like the best investment thesis, right? But it sometimes doesn't play out, right? So there's a lot of elements of luck in investments, right? Um, so but the thing is, in order to be able to notice those opportunities, you need to have done the work, I feel. So I would say that maybe it's part luck and a lot of luck in terms of timing and less luck in terms of research and doing the due diligence, I would say. Yeah.
And people
Um,
are asking, is investing altcoins gambling? And I think it's related to this because I think if you are doing your research and due diligence and you've actually even done valuation analysis on certain coins which are you see as financial assets, right? And that's why you're doing the valuation. And it's possible to do so because they have a real business use case and they have cash flow. And so you'll discount it back and generate a value to that underlying asset. So this work is actually really important. It's the due diligence of any investment. If you're buying a stock, you don't just trade it, right? But it is happening, like meme stocks, like GameStop. People are buying it because some people recommended it on Reddit. So crypto, people are buying it because somebody just recommended it, or my friend made so much money from it, so I should invest too. So is that the right way to approach it? Is that considered gambling versus what you're doing, which is investing? It's a very contentious issue, I guess.
Yeah, I mean, I like to identify myself more as a fundamentals first investor. So I would think that memes, meme coins and all those, like, I don't know, Dogecoin and all that, right? You are essentially playing a greater fool's theory, right? Whereby you are hoping that there will be a person coming along that will be willing to pay a higher price, right? But I mean, power to you, right? If you are able to play that game. Personally, I'm not good at it. I have always failed as a trader, right? So I'm always a long only fundamental first investor. So in terms of like trying to analyze those coins, I have no way of telling you, right? Because that's just not where I have the edge, right?
No, I think,
mean,
in general, I've been in finance 27 years. I've seen very few people who is a wonderful and consistent, return generating day trader. There's very, very few people who are really good at it. Most people, 99.9%, fail. And sometimes they have a good streak, but then they lose it all overnight or within weeks and months. So these things happen. And crypto is the same. I think that because of its volatility, intrinsic volatility, not all crypto and definitely not stable coins, but a lot of crypto recently, especially, the volatility just kills people. And that timing is something that we can't really control because, it was driven by liquidity, it was driven by, fundamentals, you can argue. But, when the tide lifted all altcoins and DeFi coins and everything together and meme coins, and then it all came back down together as well. So if you're unfortunate to have been roped into it and bought at the peak, then you're down like quite a lot of money. I mean, and now it's rebounding, so maybe you'll make the money back again. So I think it's important to understand the timing, why you're investing, the due diligence work that you've done to, gain conviction on your views. But also the timing of the investment is really important. If you're trying to make money like within days, it's really difficult. But if you believe in it and you hold on to it, then maybe, if it's true that this is a long-term asset class, then maybe that it will deliver. And in the case of KK, it has delivered big, and he had the conviction to do it. But I think you are very rare in the space of crypto investing, especially these days, to be honest, right?
Yeah, I would say that large parts of the price movement tends to be more of day trading and speculation, right? Yeah. So, I mean, I like to tell people, right, in terms of investing in crypto is like buying or investing in early tech VC investment, just that it has a publicly discoverable price. And if you imagine in that kind of scenario, there's bound to be a lot of volatility, right? If you imagine like those tech unicorns, right, actually had a public price, right? I imagine, the price would be as wild as what you see in crypto today, right? So in a way, crypto is like, a democratized tech VC investment in a way, because everyone has the potential to access it. Yeah.
Yeah. So what would be your recommendation to people who are saying, is it a good time to start investing a small amount in crypto? I just started working and I have long investment horizon. Doesn't mean it's okay for me to put more into crypto. And there's a lot of these questions like, should I get started and all that? What is your recommendation? I mean, not that you're giving a recommendation. What are your just general thoughts about these questions and where it's coming from?
I would say that we are probably at a part of the cycle that, I mean, how do I say this? We are part of the cycle that is a bit unsure, right? Whether we are going up or down, right? So as a result of that, although I am long-term favorable for the crypto industry, right? I think people should take a longer-term view if they want to invest now. And when I talk about longer term, it may be a 2 or 3 year thing, right? Because crypto cycles have traditionally been like even 3 or 4 years sometimes. So I would say do all your homework, right? And then size the proportion of your investment according to the level of homework you have done, right? I allocated so much because I felt that I did my homework, right? And it was cheap at that time. But I can't say the same at this point in time like back then. Although if you look at it in the grand scheme of things, I feel that in the long term, it will go up. But expect price volatility.
Yeah, absolutely. So there's a lot of questions. So on endow us and whether we're going to go into crypto, what is the right asset allocation, all that. So maybe I can just quickly answer that and get that out of the way as well, and whether we recognize it as a new asset class. I think that right now there's other ways to play crypto, right? So whether it's through a central exchange like Binance and CoinHacker and all the crypto.com and all the exchanges, Gemini that is entered Singapore. Has a nice on-off ramp, so you can use Sing dollars or whatever. Not that I'm espousing that you should do it. There's a lot of central exchanges. We're not going to be that exchange. We're not a DeFi exchange where we can actually access cryptos. We're not that exchange. Neither are we going to develop an ETF or a fund for crypto. So endow us does not have the capability, and we don't want to. ETFs like for Bitcoin and Ether and some coins have actually appeared in Canada. They're potentially listing in the US. So if there is a good vehicle through which we can invest and asset allocate, then we will consider it. Not that we will do it. I think the jury is out still on whether it deserves a core allocation in our asset allocation framework. The argument, because of its recent volatility, the lack of maturation of crypto as an asset class, and the fact that there's so many cryptos that some people call Bitcoin and Ether blue chip tokens. Is that what you would call it, KK? Would you call them blue chip? I don't know. I mean, what definition really is?
I think in a way, yes.
Yeah,
they are the most. They are the most mature, I would say.
Yeah, precisely. That's really good. Mature. And actually, if you look at the volatility, they're reduced volatility. They're lower volatility. They've fallen the less and actually have lower vol and less beta to the overall market volatility. So yeah, in those definitions, I think it could be blue chip. So those things could be considered. And so we are looking into the space and we're learning and we're looking at what other products there are. But we're never going to recommend you to invest in them, because I think to KK's point about, whether you should invest, when you should invest, and all of that depends on your personal circumstances. And your personal circumstances depends on, how much money you have, what age you are. I think KK can, put in 55% of his assets in crypto because he's younger, right? If he was 55 and 10 years or 5 years away from retirement, he's not going to go 50% into crypto, right? So all those things are considerations. And then your own risk appetite. Whether you can afford to lose a significant chunk, like KK is willing to lose it. And he has these contingency plans on other investments. But also he's, giving a safeguard to his investment by doing the work, doing the due diligence and generating conviction, which is what you do in any financial investments, whether it's stocks or bonds or other asset classes. So you do the research and generate conviction on your view. And if you have conviction, as KK said, more power to you. We will never know until time passes whether you were right or wrong. I've made a lot of investments with really high conviction in the past that went awry. I've made low conviction investments that I got lucky with and did fantastically well. Things like Tencent, for example. I wasn't really sure. I could kind of get the idea and the potential, but I wasn't really sure that it would get to where it would. And no one knows. And that's the problem, right? Human beings cannot predict the future. So we will have to do our research, assess our own financial situation and all of those things. And, KK said that he wouldn't have made this much money if he had allocated 1 to 5%. But for many people, maybe that is the right amount. I would not want to go 50% in because I'm more risk averse than KK, and I'm older, and I have 3 kids, all those things. But I can maybe allocate, 1-2% and be fine with losing it. So it's a very different approach. And Endowus is a platform, as you know, for many of the clients and the people who are asking, is a platform that is for core investments, your cash short-term liquidity. KK is a Endowus client. He uses it for CPF, for long-term investment. That's what Endowus platform is for. If you want to do trading crypto, you don't have to come to Endowus. You don't have to use DBS. You can go to all these wonderful platforms like Binance for Central Exchange and all the DeFi options that KK had highlighted. So I think Endowus is for a different purpose, and maybe in the future, if it matures, and crypto could be a part of that asset allocation. But at the moment, we don't have immediate plans, and more than anything else, we don't have a regulated, a fund or any kind of product that we can use to asset allocate to it anyway. And that goes to the next point, KK, about regulation. Do you have any strong views about regulation? Some people are asking, will it be regulated by the government or eventually? What is your opinion on Chinese government interrupting crypto? Well, I guess intervening and blocking, mining, for example, and just generally in the regulatory landscape. That would be interesting. If you have a view. If you don't, then that's fine. What do you think?
Well,
maybe add to that govcoins and government coins and like the China RMB, digital RMB, stuff like that.
Maybe I break it down, right? For regulation side, I think we can expect people to try to regulate it as far as possible, right? Especially from the custody side, right? Especially when there's entities out there offering to custody somebody's coins, and then like your Binances of the world, your centralized exchanges, right? Or your in Singapore recently we have one new one, right, which is hodl knots, right, whereby you can earn interest on coins that you deposit with them, right? So I feel that regulation would be strongly targeted to those centralized services. In terms of trying to regulate what happens in the decentralized space, right, it's a bit difficult. Unless you see a global kind of coalition, right, whereby because all these projects are being developed like not in a single country, right? You can have developers in all over the world. So how do you regulate that? It's a bit hard to say at this time. And whether that should be regulated, that's also another philosophical question to be asked, right? Because I don't know, Westerners love their privacy and all that, and this is actually in line with their values, right? Which brings me to China, right? They generally have like to have stronger control on their own financial system, and which is why China banning crypto has always been on the cards, right? Or has been a recurring theme in crypto over the years. If you Google China ban crypto, you'll probably be able to find articles as far back as 2013, right? So so in that sense, they will probably have a more heavy hand on it, right, in terms of regulation. But I feel that it would be hard for them to fully stamp it out. They will make it difficult, but stamping it out will be very difficult, I would say, because of the decentralized nature of the currency.
Okay, we've gone past the hour, but sorry, you wanted to continue?
Yeah, because you had the point about govcoins, right? Or they like to say central bank digital currencies, right?
Yeah.
I would say that is a different world. It's basically digitalized fiat, right, in terms of design. So I would liken those to like making your cash into fiat, into digital dollars, right?
Or is it like stable coins?
Yeah, in a way they can be stable coins. But in order to be stable coins in the crypto sense, you need to have some kind of bridge, right? And I feel that will probably be the way forward, right? Whether if they choose not to engage, then it will be difficult, I would say, because there's a global competition for crypto development and all that. So if countries choose not to engage, there will be people just simply shift their operations elsewhere.
Yeah, sounds good. So there's a few questions. And how much of your crypto have you cashed out? And then the reason I laughed also, KK, is because I saw this question which says, would it be the same advice as time in the crypto market rather than timing the crypto market? So, we talk about time in the market and not timing the market. They use this same phrase and say, would it be the same advice, time in the crypto market as opposed to timing the crypto market? So I guess that.
I approach both types of investments the same way, right? I don't really bother to time the market, right? It's just that, circumstances made it such that, brilliant timing on my part, right? So that I do believe in that, but that is only if you have convinced yourself that yes, this is a macro trend that is not going away.
Yeah, absolutely. Have you cashed out? Is the other question.
I would say that if you think that stable coins is cashing out, then in a way, I have cashed out to stable coins for my cost. Yeah, okay. But the significant proportion of my portfolio is still volatile coins.
Yeah. Wow, there's some tough questions. KK noted that Anchor Protocol is giving 17.95% APY for depositing UST tethers on Terra Station platform. Could you share your views on this? This is like so specific. Are you familiar with Terra platform?
I know about Anchor. But I have not engaged in it at the moment. I'm still largely within the Ethereum ecosystem. But Terra is an interesting project. I have no idea how that will play out because it has a very unique design.
Yeah, I think today's session we won't go into individual tokens and their pros and cons at the moment. Actually, there's some personal questions on me. We're asking, about price versus value of crypto, and then do I personally invest in Bitcoin and other cryptocurrencies. So just my journey on crypto is that obviously I've been interested for a long time. I'm very agnostic. I'm really pretty pragmatic about new things in general. I like trying things, new technologies a lot. So when crypto came about, I looked into it, blockchain technology as well. I've traded it just to understand why people use it and what they do. I've made money off of it. I've invested in a company that issued tokens and I didn't even know I had it. And then, recently when the market collapsed, I tried the Binance, leverage token shorts. And I told KK the story. And this is one of the reasons why I have some concerns is with these central exchanges, and share the view with KK, is that there's actually nothing we can do when, they do something that is completely unregulated and not transparent. And so my experience is that I actually shorted crypto at the peak. It collapsed. It should have made money, but it rebounded. And then Binance overnight changed the way they kind of priced it or something. And when I woke up the next morning, I should be up, but I was actually flat or up on some coins and down on some coins. And there was no recourse. There's no customer service to these exchanges. And that goes to the point about central exchanges and the governance. We don't actually. Sorry, KK.
No. Sorry, I coughed.
No, okay.
Yeah.
So I thought you wanted to add something to that.
No.
Yeah, so I just do it. It's not, I wouldn't call it investing. It's more about just learning. And I know a little bit, and I know my own experience, but it's very, very limited. And so I think KK also is more focused on DeFi's, really wants to do more due diligence and analysis, likes the yield that it generates. He's not trading Dogecoin, for example. Similarly, for me, I would never touch Dogecoin. The blue chips like Ether and Bitcoin, and new platforms that look interesting like Solana, Tezos, even Terra and Uniswap and these guys. I've looked at, analyzed a little bit, bought some, traded it, but it's more just to invest, not more just to learn rather than because if you don't do that, I don't think I learn. But I don't have an asset allocation to crypto as such. So just being fully transparent, because I don't, think that Endow as a platform will be doing it anytime soon. And I, as a financial advisor, would not be recommending people to be like, investing, their pot of money into crypto. If there is an Endow's fund in crypto, I'll die of a heart attack. I agree. I don't think we'll be doing that soon. And as I explained, guys, I'm not judging. I'm not trying to say this is negative. It's not what Endows is about. But we're not judging. So KK has made a lot of money, and I don't think we should just blow these things off. I think technology and innovation comes from places like this, at the fringes of society. And so, what Web 3.0 is about, decentralization, anti-establishment, even aspects of that, I get and I really like. And so those things resonate with me. And as KK highlighted, there's many use cases, making financial infrastructure much more efficient, lower cost, out of the control of the big banks, which is what part of Endows is all about. We want to reduce the incumbent financial institutions who are really just kind of screwing us with high fees and inefficiencies that we've just had to live with. And Endows is out to solve that in our own way in this space in wealth. But other guys will do that in financial transactions and infrastructure through blockchain and DeFi. So I think that that's really exciting, and we should follow that and understand it better before we make quick-fire judgments about the technology and the infrastructure that's being built out. KK, one quick question on environmental sustainability of Bitcoin. Is this going to be a problem for Bitcoin in your view?
I mean, in terms of the ESG narrative for Bitcoin, it's a bit tough to say.
Right.
I mean, if you see from statistics that people have produced, actually a lot of Bitcoin miners are situated in like places with a lot of natural energy, right? Like geothermal areas, a lot of hydroelectric power, right? The part that maybe people are more focusing about is like a lot of the miners in China, right? They tend to use coal fire to power their mines. So I would say that that stigma will probably stick for a while. It's up to the industry to disprove it, and maybe as time goes by, people shift to more green energy, right? Because I mean, Bitcoin miners are not stupid, right? They go to the place with the cheapest electricity. So if that is like areas with like more geothermal energy and wind energy and all that, because these generate electricity very cheaply as well, that image may go away over time.
Yeah, agree. But it is a concern, and especially in the current narrative of environmental issues, I think it doesn't sit well with a lot of people, right? Which is anti-establishment, and the whole the demographics of the people who are pro crypto and blockchain is kind of overlaps with that ESG kind of pro camp, right? So I think that's the interesting thing. I think one last maybe question, since I think we've really gone over time. Are you okay? One last question, or should we just
No,
wrap up?
it's okay. I can go all day, right? I love talking about crypto actually, but yeah.
Oh man, what is some? Okay, JL's asking, KK, I saw in your blog that your returns on crypto are $3 million. How would you advise someone with capital to achieve that kind of returns? I don't know how you can answer that.
Well, I mean,
How would you
I've had,
trade? There's another question that you can put together, which is, how would you trade in a crypto bear market, or do you only suggest holding and focusing on long-term gains?
well, I mean, the beauty about crypto now is that you can earn a yield on your coins, right?
Yes.
So you can
Oh,
actually,
can you elaborate on that a little bit? There's another guy who's asking, banks deploy deposits to pay deposits in interest. How do coins generate interest? Can you just maybe elaborate, maybe for the sake of people that missed it earlier?
oh, okay. Yeah, so in a bear market, I'll probably just focus on generating yield on my tokens. As for how that yield is generated, it depends, right, on what you are uh, investing in. Like, it can be a similar model as to how traditional banks do it, right? The protocol receives deposits and then lends it out at a higher interest rate, and as a result, the borrowing rate covers your deposit rate. That's one way of doing it. Some tokens, when you deposit it into or rather, some of these tokens are like pseudo equity, right, whereby they generate cash flows, right, and that you are entitled to, and from there you can get the yield. And
Yeah.
as for how these cash flows are generated, is generally from the use of the platform. What you are seeing at the moment is that a lot of projects are giving out tokens for free, right? So it's like a marketing gimmick. In a bear market, that likely goes away. So what you should focus on is on like real cash flows, right, from actual use rather than from marketing treasury kind of activity. Yeah.
Yeah.
Was there another question?
No. Yeah. So there's a question: should cryptocurrency be treated more like a form of currency rather than a form of investment? Isn't it like non-leveraged FX trading? And then there's another question that's: do you think crypto ETF unit trusts can provide protection against inflation? Okay. I don't know how to answer. So I think one of the things I did want to explore, though, related to these things as well, because as a currency, one of the reasons and arguments against fiat currency is that, hey, the Fed is printing, the value is depreciating, supply is increasing, and therefore this is going to zero, and we should leave fiat and we should go to crypto. So that's one argument. And then, inflation is rising, inflation eats away at the value of fiat currencies, and therefore we should buy crypto. But if we're absolutely honest and objective about crypto, there is supply, right? Increasing supply of crypto for many of those crypto coins and DeFis that you mentioned. And oftentimes this yield is paid out from that new supply, rather than, so I'm just wondering, is there a case for inflation being a risk in cryptos? And like FX, the question from Poliswork was about the FX aspect of it. Maybe like certain currencies have too much inflation, and stagflation, inflationary pressures actually lead to depreciation of value of fiat currencies. Can this be seen in crypto as well? Does that make sense as a question? I don't know.
Yeah, I understand. Well, inflation wise, I would think that due to the high correlation of crypto at this time to traditional assets, right? And inflation is going to take down traditional assets, so crypto is not going to be spared. That's my thought. Anyway, because it is viewed as a risk asset anyway, and DeFi generally is a risk asset, right? If as for things like Ethereum and Bitcoin, as in the so-called currency layer of crypto, you can kind of view it like a FX trading kind of thing, right? Also, but I'm not an expert on that, so I can't comment too much about how it will move. Yeah, there's too many crosswinds to think about. Yeah.
Yeah, sounds good. KK, so I think that was really wonderful. I think Shengxi's been moving the slides around, but people can check out the Endows platform. KK is a customer and a happy customer, I hope. Are you happy, KK?
Yeah, it performs what it's supposed to do. Yeah.
That's right. And that's the best thing. When you invest in something and it does what it's supposed to do, crypto has made you a millionaire. Endows is giving you, CPF accrual and make you a CPF millionaire, hopefully as well. But yeah, just really wonderful to have you, KK. I think it was really fun, really insightful, and a lot of learnings. I hope that the audience has learned a lot as well. Maybe we can just show and give a plug to the next slide, the one after, which gives us next week's webinar. Next one. Yeah, so we'll have a Fund Smart series where we've onboarded 11 new funds, some of the best-in-class funds in income, products, and real estate, etc. So I know there's a rising interest in real assets out there. So please join us. Wei Mei and Yulin will be presenting. I'll take a break for the first time in a while, which is great. But we have two amazing people presenting on all the details. So please join us next week. And as I mentioned, Rooming from the Work Salary Man will be joining us in 2 weeks' time with Greg on pets and investing as well. So with that, I want to thank KK for this ultra long session. But thank you so much. That was really fun. And maybe we should do this again.
Yeah, and hopefully we have a bull market then.
Or everything.
Well, everything would be great, but we'll see.
Okay, wonderful. Thanks, KK. And thank you, everybody. Have a wonderful evening.
Thank you very much.
Thank you.